Okay, let's talk about the first item on the list. There's a good chance that your client's home is a major asset for them. So what's the best way to protect it? Guaranteed replacement cost. So when writing a homeowner's policy, there are three different methods of valuation: actual cash value, replacement cost, guaranteed replacement cost. So actual cash value means in the event of a loss, the insurance company is going to depreciate the value of the property before settlement. That's bad. You do not want that. What you want is the insurance company to provide you with new stuff. You want them to replace the stuff that was damaged. So that's a replacement cost policy. That's much better. Now, the only catch is the replacement cost is only up to the limit shown on the insurance policy. So unless your client wants to meet with a builder every year and make sure the valuation of their home is up to date with the new inflation that we're all experiencing, they could find themselves underinsured in the event of a catastrophic loss. So what you want, what your clients want, is the holy grail of homeowners policies: a guaranteed replacement cost policy. That means the insurance company guarantees to replace the home in the event of a catastrophic event, regardless of the limit shown on the declarations page. So this is much better. It costs a little more, but it's something that your clients definitely need. And to my knowledge, your good neighbor Jake and Doug and his ostrich friend that you see on TV all the time do not even offer this. They only offer this. So when talking to your clients, bring this up. If they need help, we'll be happy to help. Thanks.